What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update for you guys. So what we're going to cover today is a tweet that was sent out by Aron, which basically exposes all of the naked shorting going on in shares of AMC. So we're going to do some very simple calculations to show you guys just how probable this is. Now, in addition to this, we are going to be covering the SEC approval of the Nscc ruling 801. This is a very important ruling, and we're going to connect this to a couple of the other rulings that we have seen come out in these proposed rule changes by the DTCC and the Nscc over the past couple of months. So we have a lot of information to cover in this video, so make sure you guys stick until the end so you are caught up on everything happening with AMC. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks. And if you guys enjoyed the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So at the current time that I am recording, AMC is trading at $9.26, down about 1.4% on the day. So we saw a massive rally, then a massive sell-off. Now, we do have earnings coming up actually tomorrow, which is going to be a very important catalyst to look out for. But as I've said in a couple of my other videos, I'm not really focused on what the earnings numbers are going to be. I'm more focused on what is going to be said in the conference call. And when you think about it logically, earnings is not really going to change the position we are in as AMC shareholders. We still own a vast majority of the shares of AMC, and we have been able to prove pretty substantially that through all of our research that the hedge funds have been manipulating the heck out of this stock. They have been naked shorting it, and earnings is not really going to change the trajectory of this squeeze that we have coming up. I also want to briefly bring to your guys' attention something very interesting that I want you guys to know about on the option chain. So I've seen a couple of posts on the Reddit forums that said that since we own such a significant portion of AMC shares, that now could be the time to buy options. Now, when we come over to this June 18th, 2021 expiration date, we can see that these 40s have an open interest of 80,092 and a volume today of about 990. So not very strong on volume, but the amount of contracts being held at this strike is very substantial, since the open interest is essentially the amount of contracts that are being held in people's brokerage accounts. Now, what I want you guys to think about is that there's about $2 million betting that AMC is going to be going to 40 by this date. Now, if that doesn't happen, this $2 million, the vast majority of this is going to be going to the institutions that sold you these contracts. Now, do you really want to be funding these institutions right now? Maybe, maybe not. I want you guys to be able to make your own decisions, but options do give you a lot more leverage, so you could potentially end up with a larger gain if you are trading these options, but you also have to weigh the pros and cons and actually think about, well, if this doesn't work, where is this money going? Now, before we get into the rest of the information, sorry if you guys can hear some noises that are coming from outside the house I'm staying at right now. They're doing some construction. They're actually knocking down some buildings. So sorry if there's a little bit of noise in the background of this video. Now, when we come over to these Ortex numbers right here, we can see that the utilization fell a little bit going into today, which means that there's more shares that institutions are actually willing to lend out. And that could suggest that some of these funds have started to cover their position, and they have returned these shares back to the institutions that are then going to lend out these shares again. But we are seeing the utilization bounce back between the upper 99% range back up to 100%. Now, the estimated short interest as a percentage of the free float is sitting at about 22.74% at the current time. And as I've said before, I don't fully trust this data that we are looking at here on Ortex, even though it is supposedly the most accurate data that we have. We just have so much manipulation going on with this stock. In my opinion, it's better to look at the trends of where these numbers are going than taking these numbers at face value. So let's get into a brief summary of what the SEC has just approved unanimously. So when we come over to this Reddit thread right here, this was posted by Antioch Orantes on RGME. So shout out to this guy for creating this thread. So the Nscc 801 is the companion amendment to DTC 003, which was recently filed and effective as of March 16th. Here are the links to the filing in the notice of filing of Nscc 801. So we can see that the DTC 003 is requiring the members to report their positions on a daily basis versus a monthly basis, or when they have a big option event coming up. So furthermore, liabilities arising from the misreporting of positions fall solely on the misreporting party. Now here's where 801 comes in. We will use the position reports received via the DTC 003 to calculate if it's necessary for you to contribute a supplementary liquidity deposit, which essentially means just, hey, give us more money, add to your margin, to your positional risk. Furthermore, if multiple members have supplemental liquidity obligations in excess of $2 billion each, we can decide if it's all on them or if it should be split up pro rata among all members. So essentially what they're doing is they're going to come in here and actually see if the different members are over leveraged in a given sector. So right down here, we can see you tell us what's on your books every day instead of every month. If you lie about it and that lie causes us to lose money, you are paying the bill. Now, if your positions are blanked enough that you are at risk of losing so much money, it'll mess us all up. We'll margin call you so fast it'll make your head spin. If 2 or more of you members were that much of a blank, we can make you pay, or we can make everyone in the gang have to chip in. That's essentially what we saw up here. Now, as I said before in a couple of my other AMC videos, it's easier to understand all of these different proposed rule changes if you look at them as an aggregate. So when we come over here, we can see a very similar theme that is arising with a new Nscc rule. This is going to be 005. So we can see that the Nscc wants to raise the minimum required fund deposit from $10,000 to $250,000. Now, when you take a look at the actual dollar amount, $250,000 is nothing to these institutions. But when you take a look at the actual amount of institutions that there are that are members of the Nscc, it's 3,440. So when you multiply 3,440 by 250,000, that's around $860 million that they are going to be able to raise from this. Now, additionally, in this actual proposed rule change filing, they are coming out and saying something very similar to what we saw in 801. They're going to manage and monitor all of the different members and pretty much see exactly what their risk exposure is at the current time. And if the Nscc decides that they are at too much risk, they are going to make these different members put more money into these accounts. Now, aside from this being able to affect AMC in terms of the margin calls that we are going to see in the near future, why would these different regulatory institutions be coming out with multiple proposed rule changes that are looking to increase these margin requirements and closely examine their members and their risk exposure? Now, here is why I am thinking this is happening. When we come over here, this chart is going to track the margin debt, as we can see right here, and the S&P 500, and this chart is actually inverted so you guys can see this divergence. So on the left here, we can see that the billions of dollars in margin debt, 100, 200, 300. So as the chart goes down, the margin debt actually increases. At the current time, we are seeing the margin debt in the United States at around $822 billion. Now, when we come over here, we can see that, shout out to Joshua James with all these charts he puts up. I've used his tweets a couple of times. Make sure you guys go give him a follow. He puts out a lot of good information on AMC. But when we look right here, this is going to be the U.S. leverage loan default rate. We can see that it has inflected back here and the default rate is spiking. So the DTC and the Nscc are seeing that the overall margin debt in the market right now is spiking to a very high rate, and they are also seeing the default rate start to spike, with the projected rates going as high as 6% through June of 2021. They do not want these margin calls to happen and their members to get blown out, so they are trying to get their members to give them more money in order to de-lever their positions. Now let's get into this Aron situation, because this is very big news. When we come over to his Twitter page, we can see that his tweet yesterday, he essentially said, earlier today, AMC rescheduled our annual meeting of shareholders to July 29th. Among other reasons, we did so to give our millions of current individual shareholders more time to let their voices be heard and cast their ballots on important shareholder matters. So this individual replies, did he say millions of shareholders? Aron replies, yes, indeed, that is right. AMC now has over 3 million individual shareholders. Now, with the public float of AMC being at about 417 million, when you divide that by that 3 million individual shareholder number, that means that on average, every single entity that is holding AMC right now has only 139 shares. Now, he, I think in this tweet right here, is trying to suggest to us that there's a lot more shares out on the market than there's supposed to be. Now, we can see here, he did reschedule right here. And the reason why a lot of people are assuming that there's a lot more shares that are out on the market right now is due to the naked shorting situation that we have going on. And we can see here that's kind of proved by these failed to deliver numbers. So what happens when a failed when a party fails to deliver their shares is that they do not have access or any right to the shares that they have sold, because these shares do not exist. We can see that on April 13th through the 14th, the failed to delivers for shares of AMC jumped up about 2.3 million. Now, coming back over to Aron's tweet, we went over two theories as to why they actually want to push back this shareholder meeting. Now, he kind of confirms the actual first theory that we talked about. So he says right here, among other reasons, we did so to give our millions of current individual shareholders more time. What they are doing here is they are most likely seeing that they're getting way more votes than they're supposed to be getting, according to the amount of shares that they have on record being out in the market. Now, at the current time, it is possible that they are seeing that there are more votes coming in than they're supposed to be out on the market. And if they delay this date, it's going to give shareholders a lot more time to accumulate more shares and vote on these shares that they are accumulating, which is going to actually blow the top off this situation even more. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.